All right. Morning, everyone. Gonna kick it off here. Okay, last night, U.S. session, we got a reasonable bounce. I think we closed up over a little over 1% in the S&P, and we really had a very very strong day on the Nasdaq. Really being led by Facebook, which was up about 18% on the day to record highs, and the Nasdaq closing up almost 2% on the day. You can see there every sector up. Really a nice hard bounce. What I find interesting about last night's action is simply that the states traded so well, but we couldn't follow it up at all in Asia, and that's a little bit concerning. So I think we're going to have to see this morning, how we're going to be able to kind of play on the back of that. Are we going to follow the turnaround in the states, or are we going to kind of follow what happened in Asia? We have had some reasonable numbers coming out in the States as of late, but the data the last maybe month or so has become a little bit mixed, with the jobless claims numbers starting to soften just a touch. The GDP number yesterday was kind of in line, which I think was maybe a disappointment. A lot of people were expecting a nice beat there, so we'll continue to watch that going forward. All right. In Asian markets, you can see there a bit of mixed action, like we said, from my point of view, disappointing following on the back of how strong the U.S. was. Nikkei was down. The yen really couldn't show any signs of weakness versus the dollar last night, and so you couldn't get any follow throughout the Nikkei. And I think the Nikkei was up quite a bit in the early session. Shanghai also couldn't get anything going. Hang Seng down as well. And then the Australian market was flat. I mean, the Kospi was the only real outlier. So, the Kospi was actually closed. So, in Japan, we continue to see it driven by the yen. We've just got to pay attention to that. I think it's really the dollar yen is now back to some sort of a leading indicator status, and a very good risk barometer at the moment. A lot of guys are in that short yen trade. Already started to pick it up back against that 102 level. I think if we drop 102, then we could get a real risk-off move in this market. So just be careful and keep an eye on that over the next few sessions. All right. Siboney was out this morning with a production update. Headline earnings per share expected to be 350 to 360 cents per share versus estimates of 280. Production 2% higher versus previous guidance, and all-in cost 6% lower in rand terms than previous guidance. So I think very strong numbers out of Siboney. I mean, you got to remember that these guys are actually going to be the ones that benefit the most out of weakening rand, because they are 100% South African based. All their costs are in rands, all their income is in dollars. So I think that's one of the reasons for the nice beat there, and probably some of the more recent rand weakness isn't even factored in there yet. All right, whole slew of data today. We had lots of stuff out in Japan. We had the jobless rate numbers that were slightly better, CPI numbers which were slightly tamer, with manufacturing PMI numbers which were better than the prior numbers, in line on industrial production, and slightly weaker on consumer confidence out the UK overnight, and then housing starts were better in Japan. And just in a little while, we've got retail sales in Germany, we've got PPI out of France, CPI in Spain, unemployment rate and CPI numbers in the Eurozone, PPI in Italy. We've got the trade balance here locally at 2 o'clock. That's going to be a big one for the rand. So we're going to have to keep that in mind. Mark that down at 2 o'clock to note that that's coming out. We're looking for 3 billion. So just pay attention at 2 o'clock for that number. And then later in the States, we've got personal income, personal spending, Chicago purchasing manager numbers, and Michigan consumer confidence. All right, let's jump into the maps. Okay, the first one I want to have a look at is I'm going to look at Woolies. I'll actually back it out just a little bit here. We can just slightly clearer look. I'm just looking at Woolies. Well, we're going to run simply on the closes here, just to kind of, because these levels, although they're close, they don't totally line up to being horizontal. So I think yesterday where we closed is literally right on the number in terms of a close. I wouldn't say that it by any stretch of the imagination that's dropped out until we maybe fall below the lows, or I would say the closing lows, which are really here. I think if I'm not mistaken, that was at 58. 58 to 82 it looks like. So that's kind of where I would mark the bottom here in Woolies. If this drops, you got to look up below. It will get absolutely ugly if Woolies drops to 58 to 80. But for now, I think it's big support. You can see from where we dropped out up here, we've really, as of yesterday, intraday, we reached our target from where we fell out of this little pattern here, so which is down around $60, and so maybe not a bad little place to be nibbling. But I think you've just got to be careful because there's still a lot of risk out there in some of these shares, especially the interest rate sensitive ones. All right, Tiger Brands. We tweeted this one out yesterday afternoon. This thing an absolutely how symmetrical the lines are on this bear flag is incredible. I think there must be 10 or 12 touches on this line over a month period. On the downside, you can see there we did get below it yesterday intraday. We closed right at it at 65. I think if we can close below 65, especially if we can push a little bit away from that, I think we'll at the very least we'll test the lows, which are down at 250 in Tiger Brands. We have kind of pulled back quite hard. We've pulled back quite a long way from where we were just 4 or 5 sessions ago, up around 283, 284. So we may end up bouncing a little bit up off of this, but I think this thing's definitely it is without question in a bearish pattern now. You can see there we came back up, we tested resistance on this flag, came back down. If we drop out the bottom of this, like I said, I think we've got at least 250 on the cards, and I think there's even more to the downside than that. All right, Grindrod. Grindrod been one of the stronger ones. If you're really a believer in the global market turnaround, then I think that this is your level. Your risk range here is somewhere between 25.70 and 26. Looks quite nice. We haven't had a huge pullback, but this one's not gonna have the same problems in terms of it's not going to be really affected by interest rate hikes here locally and things of that nature. We're really more looking at a global economy at G&D, and I think maybe it's a decent place to pick it up, especially if we're able to shake off the worries. Seeing him probably push back to new highs. All right, let's look at Truworths. Truworths, you can see here, as of yesterday's session, really just kind of dropped out the bottom from about 73, which is where I would peg support. From where we were really kind of topping out up here at around 79, that's going to give us a target price of around 67 out of the breakdown out of this range. So I'd look at 67 in the near term, maybe in Truworths, and I think that some of the retailers, I know it's incredibly tempting to sit here and bottom pick, and there will be bounces, and there'll be some significant bounces, and probably it could be right to bottom pick 1 or 2 of them, but just be careful that you're not, you're not literally getting greedy because the things have fallen 20 rand when it's still got another 20 rand to fall. So just be careful out there when you're trying to bottom pick these retailers. Next one, we're going to look at SPAR. I know we showed this one 2 or 3 days ago, but we've actually properly dropped out the bottom of this pattern. This also has just dozens of touches on that line. So the significance of this 121 level is incredible. The fact that we've dropped that finally, and we dropped it convincingly yesterday, I think that we will absolutely sell off to an extent here, and I would say that we should be able to come back and test somewhere down here along support some of the recent lows. They should definitely be affected by the interest rate hike here. We drop in the 200-day and support all at the same time. The height of this channel definitely will take us somewhere along down there. So I think there's definitely some room to the downside left in SPAR. All right, let's look at Amplats. This is the last one we're going to have a look at today. We'll look at a 5-year on Amplats. We'll actually just look at the daily here. 5-year on Amplats, and we'll just if you look closely here, you can see this is also, it's been an incredibly consistent downtrend running back for the better part of 4.5 years now. Every year we go lower, and it stayed within this really tight downtrend here. You can see there we finally popped to the upside, and I think it's kind of done so quietly without anyone noticing. It's kind of gone out of favor. No one's really paying a whole lot of attention to it at the moment, and it's breaking out here. And I think that's really important. And it's also important, the rest of the mining space is doing the same thing. And just keep your eye on these Impalas. You could very quickly see Impalas also popping up above resistance here at about 127, which could really take it significantly higher. I think over the next few weeks, if these things can hold around these levels. And that's it for today, guys. Thanks a lot.